Ooga booga to AMC is up almost 18% here today, approaching $22 per share as we round off the last hour of trading. Now, we will cover everything you guys need to know in a very short amount of time. And yes, ApeCoin, no, not ApeCoin. That's different. Ape as a security, which will trade as a stock on the stock market, is equivalent to one preferred AMC share. So it's not a dilution that they're doing. That's not what it is. You will get one share of Ape for every one share of AMC that you own. Now, it's different than dilution. It's doesn't have the same voting rights as one share of AMC. It has some voting rights, but people would have to vote to make them into AMC shares at some point. Now, that's not the point here. What Adam Aron is actually doing, he is exposing synthetic shares. Yes, imagine it like this. They are only giving out these shares to legal shares, to the almost 17 million shares that are supposed to be outstanding. Now, if there is a lot of people that don't get their Ape shares, well, that's a problem. And why is AMC stock actually going up so much today? It's because the synthetic shares. If hedge funds have a lot of synthetic shares out there, if market makers and brokers have done all of this fraudulent shit over the past year and a half, well, what do they have to do in order to not be exposed? They have to buy AMC stock right now, so essentially nobody gets those synthetic shares, so it's not exposed to the public, so everyone is delivered their Ape shares, and that is why AMC is up 18.5%. Now, on top of that, AMC in the future can issue as many as 4.6 billion more Ape shares, and who knows what the notional value of these shares will be, because it's not directly equity in AMC, it's a voting right of AMC, so I doubt it will be equivalent to the actual share price, but there will still be some value there, and AMC can issue more and more of these shares and use this somewhat as a currency, in their words, to go on a little bit more of the offensive. So this is fundamentally a positive. AMC had fundamentally positive earnings, and this is helping to squeeze out the shorts of AMC stock. Now, there's different implications you could pull out of this as well, but I think that's really the main reason why AMC is rallying. Hedge funds have to buy AMC stock unless they want to have their synthetic shares exposed, and that's obviously not something that they want to happen. So that's why AMC stock is rallying here today. If you guys want to come trade with me live in real time, link down below in the description. We do have some calls on AMC. We did actually profit on the puts earlier in the day, and we are letting the calls ride, so it has been a beautiful trade nonetheless. Now let's talk about what is going on with the data behind AMC and what is happening here in the stock market today, because things are getting a little bit dicey. The S&P 500 down about 0.5%. It's been very volatile. The low we hit was pre-market before we started trading at 409.26, and why we actually hit that low is because payrolls increased 528,000 in July, much better than expected, in a sign of strength for the jobs market. Key points: non-farm payrolls rose 528,000 for the month, and the unemployment rate was 3.5%, easily topping the Dow Jones estimates of 258,000 jobs and 3.6% respectively. Wage growth also surged as average hourly earnings jumped 0.5% for the month and 5.2% from a year ago, higher than estimates. Traders are now pricing in a higher likelihood of a 75% or 0.75 percentage point hike for the next Federal Reserve meeting in September. And that's the craziest part, that throughout all of these Fed speakers that have came out and said we're nowhere near done raising rates, everything negative that we have heard about rising interest rates to come, well, the probability of a 75 basis point rate hike as of yesterday was 19%. Now it's sitting at 61% after this huge beat to the payrolls, because after all, what's the two Fed mandates that the Federal Reserve has? Maximum employment and stable prices. Now, if you're well past what people thought was maximum employment, which we are right now, well, that's a problem. If wages are going up so aggressively, that's a problem, because what do businesses have to do? They have to keep raising prices as their input costs go up. What does that do? Leads to higher inflation. So the Fed actually wants the job market to start relaxing a little bit. And if it's not doing that, if it's actually doing much better than what they expect, and, you know, to a fault doing better than what they expect, well, they have to keep raising rates aggressively, because job market, inflation, they're going to go hand in hand. So that's really the big thing that is affecting the broad markets today, and that is why you're seeing somewhat of a negative sentiment across the board. Now, on top of that, you are seeing the yield curve, which is inverted 40 basis points, inverted another 12% here today. You now have a yield curve that is inverted more than before the dot-com bubble. You're inverted to the 1987 levels and the 1989 crash. You are massively inverted. So investors, they're selling the 2-year bonds, they're buying the 10-year bonds. That's why you're getting paid out 40 basis points more on a 2-year bond. But the fear is about inflation. Imagine it like this. I've said it once and I'll say it again. If you're buying a 2-year bond that pays you, say, 3%, but inflation's expected to be 5% over the next 2 years, you're not going to buy that damn bond. Why would you not buy that bond? Because you're going to lose gross buying power. You're going to lose some money. So that's why that's happening. But over the 10-year period, if you expect inflation to go back down to 2%, which I think a lot of people do over the next 10 years, well, a 10-year bond might not be a bad bet if it's offering you, say, 3% or even 2.5%. So that's what's going on with the yield curve. Something I keep up on my computer, and I watch this on a freaking hour by hour basis, because it's getting insane at this point. And also the Fed rate monitor tool, which you guys definitely want to keep up for yourselves as well. Now, AMC stock, another quick look at what we're doing, still up about 20%, sitting at $22.45 per share, an absolutely parabolic rally that we have been seeing. Now, I will say for next week, we don't have a lot of economic data, but we have a lot of important economic data. So on Monday, you don't have anything. On Tuesday, you don't have anything. That's really going to move the markets. Now, on Wednesday, you got core inflation rate year over year for July, and you do have CPI for July as well. That comes out at 8:30 in the morning. Wholesale inventories, and that's pretty much it. You do have monthly budget statement for July as well. That will also be important, but CPI is really going to be the meat and bones of this next week as far as data, as far as things that will move the stock market down. If CPI comes in higher than what we expect of 8.7%, but especially higher than the last rating we got, which was 9.1%, the stock market's going to be in a world of trouble. Good jobs, good job number, high inflation. We're not getting a smaller rate hike, and we might start to price in a 1% rate hike or more. And that's why it's important to watch the Fed rate monitor tool. If you're ever curious what the Fed is going to do as far as how they're going to raise rates, if it's going to be a small hike or a large hike, look to this. Whatever the markets are pricing in with over 60% probability, that's what the Fed's going to do. That's what they've done over the last 40 or 50 years, and rarely ever deviate from that, except the March rate cut that we've seen. That's the last time that actually happened, and that does not happen all the time. So there you guys have all of that info. Now for Thursday, you do have PPI month over month for July as well, expected to come in at about 1.1%. So we'll see on that. Core PPI month over month as well. Initial jobless claims, continuing jobless claims, pretty much it for that week. And then Friday, you do have Michigan consumer sentiment preliminary for August, comes out at 10 a.m. Last survey we got, we did see a very big reaction as well. So you definitely want to watch those 3 data points really: CPI on Wednesday, PPI on Thursday, and the Michigan consumer sentiment on Friday. Depending how CPI goes, well, that's probably going to dictate, are we going to hit new lows or continue on this rally. If CPI were to come in, let's say at 8.5 or 8%, well, you're going to probably see a massive rally in the markets. If you see inflation come in, call it 9.2 to 9.5, you're going to see probably a 2% down day. If inflation somehow came in over 10%, well, you're probably going to look at a 4 or 5% down day. That's how you guys can basically wrap up or summarize next week in a nutshell. Now let's go ahead and look at the Ortex data and go over everything else you guys need to know, specifically around AMC stock, because wow, this has been a day. And congratulations to everyone that is holding AMC stock that continued to buy the dip. Now, you're not seeing a lot of positive order value for the day, which is a very encouraging thing to me. You're probably seeing a lot of FOMO heading back into AMC because the FOMO is out there, but it hasn't touched AMC for a really long time, and you've seen a lot of other stocks make pretty big moves, but not really AMC. Now, the positive order value for the day is 35%, 87 orders totaling $7.28 million. A lot more dollars that are heading into AMC options here today, 7 million. Usually we don't even get close to that on a daily basis. So a lot of 2150 calls, 2250 calls coming through for August, some $30 August 19th calls coming through, $35 August 26th calls coming through. So it looks like people are positioning for a pretty decent rally to the upside. Now, as far as the short interest of free float, that's sitting at 18.4%. Like I said, this ape share, whatever you guys want to call it, is going to be a positive thing, and it's going to help push out shorts in AMC stock, and that's probably what we're starting to see a little bit today. I think this is mostly FOMO. I don't really think this is a short squeeze. The velocity really hasn't been there. It's been a slow melt up really throughout the day, but 18.4% short interest of free float. Free float out on loan, 24.71%. Shares on loan, 127.33 million. Days to cover, 2.99. Cost borrow, 9.26, and 100% share utilization. Cost borrow average at 8.84%. Cost borrow max at 10.18%, and cost borrow minimum at 4.33%. So all in all, guys, pretty good day for AMC. Pretty good day for anyone that is holding calls, certainly, that has been buying the dip, or anyone that does own puts in the S&P 500, and not a bad time to look for some protection in your portfolios, potentially take some profits. I'm not taking profits in AMC stock until we get the short squeeze, but certainly in some other stocks that have rallied, not a bad idea to do so with that one. Now, as far as the technicals on the daily candlestick chart, we are now above the 200-day moving average. So how does this play out from here? Well, even my price target by the end of the week was in between $18 and $20 per share. Didn't look like that was going to happen up until today. Well, it did happen, and we exceeded that. Now, as far as the 200-day moving average, either coming on Monday, you're going to get a lot more steam and momentum, or you're going to probably fall back down to the 200-day moving average. So the higher we get today and the higher we close today gives us more cushion to make a move back down to the 200-day moving average. You got to watch these moving averages and key levels. The last key level was around 1850, while this one is the 200-day moving average. Since we broke out above that 200-day moving average, sitting at $21 per share. So if we continue higher, let's say we close at $23.50 for the day, then you're going to have a pretty decent gap between the 200-day and the price of the stock. And if we do get more downside momentum due to the markets or anything else, well, we should settle around that 200-day moving average. If we just get more steam and momentum from there, well, it looks like we could break out above 25 and 30 pretty easily. We have not been above the 200-day moving average really since December of 2021, and same thing for the 100-day moving average. We have not been above that since November of 2021, besides this brief rally in March. And we are looking very good now. We are above the 50, 100, and 200-day moving averages. So it looks like we're probably due for a pretty substantial rally. Look what even happened last year. We peaked out the day we crossed above the 200-day moving average. We peaked out right here, and that was March 29th. And we never went back to even close to that. Well, now we're firmly above that, and it does not look like we're peaking out anywhere close to the 200-day moving average this time around. So Adam Aaron, win pounce. It looks like we are pouncing, baby. Shout out to Adam Aaron and the team of executives at AMC. They definitely pulled the rabbit out of the hat on this one. Something I honestly did not expect or see coming. Now the RSI is at 77.78 and the MACD is extremely bullish. And that is going to be it for this video. That's what you guys need to know. And if you guys want to get some free stocks to go out and buy yourself some AMC, sell those suckers and go make an order on AMC. Webull, Moo, and Public down below in the description is your way to do so for that one. And if you guys want to come trade with me live in real time, link down below in the description as well. Like I said, we got some calls on AMC. We had some puts. We were strangling earnings, and we sold out them puts early in the day. And now we're just riding the calls out. So you guys enjoy the rest of your day. Enjoy your weekends, and I will see you in the next one.